Good morning, Alex Cole, this fine February 3rd of 2022. How are you doing, my friend?
Very well, thanks. Good morning. How are you?
Well, it's a snowy, blizzardy, in fact, winter storm watch upstate New York. So I'm going to be right here in this nice warm office for the rest of the day. For
We
all
had
of
our
you,
snowstorm and it's passed, so
thank
we've got
goodness.
some melting snow now.
Yeah, a little flooding risk, I'm
Yeah,
sure.
yeah.
For all of you watching this on YouTube or on StockCharts TV on demand, thanks so much for joining us. What a week to be trading in the markets. Alex, let's dive right into the GoNoGo charts to understand what's happening from a trend perspective. And starting with that ratio of the Dow to the NASDAQ. We've been talking for weeks, if not months, about the rotation out of growth and into value. Last week was a interesting week to see the Dow outperform as more of those capital intensive companies reporting earnings and showing some new leadership. So what do you see on the chart before us?
Yeah, we are still seeing, though, the trend in place for that rotation.
Mhm.
And like you said, last week, the massive rally really, was it a bear market rally or was it the start of a new trend in that more growth orientated environment? But today's, you can see the gap up today and that renewed momentum showing us that this go trend is in place, and we're getting actually a go trend continuation icon on this ratio here.
Absolutely. So the Dow Jones Industrial Average outpacing the Nasdaq 100. Just another sign, another way to look at that relationship between growth and value. All right,
Yep.
well let's keep moving. Obviously, one of the things that you and I learned from the CMT Association years ago is that multiple time frame analysis is critical to responsible investing. So we've
Yep.
been looking at this daily chart. Let's look at the same ratio on a weekly chart and just see what that's telling us.
Yep. So the weekly chart of that same ratio shows that we've got the go in place now after there's a lot of things happening here. We had a no go as growth outperformed on a
Mhm.
longer time frame, but then we saw the go no go oscillator able to break above zero, and then finally the go no go trend painting those amber directionless go fish bars before finally now with this week's price action
Mhm.
painting a go.
Absolutely. So the rally beginning in late 2021 on this weekly chart, pulling out of that no-go, we're seeing go no-go oscillator in the lower panel breaking into positive momentum, and now the trend change. Remember, trend following is by nature a lagging indicator. We're not looking at the absolute bottoms and the absolute tops. We want to capture the meat of the move. So looking at this ratio chart, obviously the rally began through December and then into January, but we're seeing confirmation from an overall trend perspective, that blend of technical indicators telling us that now indeed the value sector, or in this case, Dow Jones Industrial Average, outperforming the NASDAQ 100 in a more solid go trend. All right, let's dive in a little bit more to the macro perspective, Alex. We've been talking a lot about the rising interest rate environment,
Yep.
obviously fears of inflation in the U.S. economy has everybody keeping their eyes very closely on what the Federal Open Markets Committee is going to do in terms of hiking rates and how many times this year. I know last week's edition of this Go No Go show, we were following on the heels of the Fed's meeting, and
Mhm.
we didn't see a rate rise last week, leaving the markets in a little bit more uncertainty in terms
Yep.
of when that's going to happen, how aggressive they're going to be in terms of stemming the inflation by raising rates from the Fed's perspective. So let's dive into SHY. Just take a look at the short-term U.S. Treasury bonds because it was the short end of the curve that was really showing a lot of action last week. And of course, remember, we've got prices moving inverse to rates. So
Yep.
as these government bonds sell off, rates are rising.
Yeah.
And Alex, it looks like that trend has continued throughout this week.
Yeah, and you said, the rates didn't rise dramatically last week. Maybe some rate hikes have been priced into that kind of activity. But on the short term here, we see this continued no-go in prices of Treasury bonds
Mhm.
when looking at the SHY, the SHY ETF. Really just falling to new lows. The oscillator showing that we are on heavy volume and we're once again oversold. So very, very strong no-go to the downside for prices, which would suggest a fear of those rising rates. And if
Mhm.
we do look at the rates themselves via TNX, we can see that they have got back to where they were before. So they haven't gone to new highs, but definitely more of a rising rate environment, as you can see here.
Absolutely. So these short bonds, this is just 1 to 3 year government treasuries,
Right.
and it was the 2 year rate that really bounced last week. We're seeing that continuing to move higher. But as you mentioned, Alex, the 10 year rate is really
Yeah.
the sort of the benchmark for a lot of investors and in understanding where we're at in this rate environment. So let's switch over to the TNX, and
Yeah.
this is again not bond prices. These are the interest rates themselves.
Right, and this is TNX, and we're looking at this. We want to get this to a daily chart. We have some levels on here that we've been looking at, and we saw it break above this resistance several weeks ago now, and continue to find support and test those levels. And this week, what we're seeing is again renewed momentum. The oscillator finding support at zero, and price rising again towards these highs that we've seen. So it's certainly consolidated above the levels that we thought might provide some support.
Absolutely. And what's great about a clean chart like this from GoNoGo is that you can see, areas of support and resistance. And it looks like we've entered that trend channel between, 1.8%, 1.9% interest rates. And we're sort of volleying around in there as the markets try to understand which direction we're going to go. Right now, from a trend perspective, Alex, we're on a strong no-go. That's that blue bar on the far right side.
Strong go, yeah.
Strong go. And then the green icon underneath price. Tell us a little bit more about, from a GoNoGo Charts perspective, how these are constructed. What is that telling us from a data visualization perspective?
Yeah, so the icons really, really add weight to whenever you're looking at price activity. And these green circles are go trend continuation icons. And that tells us that momentum has found support and come back in the direction of the go trend. So if you turn your eyes to the oscillator down here, we know that momentum shouldn't see any oversold conditions when in a go trend. So we expect when the momentum falls to neutral and we've got this objective level of support at the zero line, we expect support. And when you get that support, when you get the oscillator finding support at zero and rallying back into positive territory, then we highlight that with a go trend continuation icon. So to see multiple now continuation icons towards the right half of this price consolidation, those are positive signs. Well, positive signs in the price action of interest rates.
Of interest rates. Absolutely. It's a mouthful. But for all of our viewers, what we're trying to understand is, the direction of rates have been up. And in the short term, if we're just looking at this daily chart, we can see that throughout this trading range between about 1.77 and 1.9, we've been making higher closing lows. Haven't broken out to new highs, but that's shaping up to show a lot of weight of the evidence towards a trend higher. And when the momentum resurges in the direction of the trend, we know there's a positive momentum for that trend in interest rates. And Alex, just one last little housekeeping item. I see the orange grid of GoNoGo squeeze building on that bottom. Just talk to our viewers for a second about what is being represented there. How is that constructed?
Of course. So we're always trying to get the best visual representation of the complete technical analysis of any security or asset. So the grid climbs, that orange grid will climb for every bar that the oscillator remains at the zero line. So what that means is that all of the inputs to our blended momentum oscillator are in their neutral territory. So there's no overbought, no oversold. We're in neutral for momentum. And so as that oscillator continues to ride the zero line, we show the grid climbing to represent the sort of reducing volatility, that sort of tug of war where we're not really going higher very fast, we're not really going lower very fast either. And what we find usually, or what we expect out of a long or a significant squeeze in volatility, is a move in one direction when that squeeze is broken. So this isn't a max squeeze, but certainly we have seen a period of reduced volatility, and now the squeeze is being broken in the direction of the trend. And then, of course, like we mentioned, we get that go trend continuation icon.
Absolutely. And here we are on Thursday morning, February 3rd. We'll watch to see where this ends up at the end of the week. And then obviously going to be talking about this in our weekly research pieces from GoNoGo Research. But thank you very much for walking us through that, Alex. So understanding the interest rate environment, understanding that value has been outperforming growth. We're seeing the Dow lead US equity indices. Let's take a look at the sectors of the S&P 500 just to give our listeners an idea of what is trending on a relative basis against the index. So the way that this is constructed, a GoNoGo Rel Map, is looking at the trend conditions, same GoNoGo methodology. So you've got aqua and blue for go trends, pink and purple for no-go trends, and those orange bands are suggesting the area of neutrality or time to go fishing. So when we're looking at this relative strength heat map, we're looking at what sectors have been outpacing, what has been leading the S&P 500 index. And obviously right there in the middle, we can see a lot of the industrials, the energy has been really the name to be in all year long. But Alex, what else jumps off of this chart to you in terms of where people can find relative strength within the equity sectors?
Yeah, and I think this kind of chart helps people with that, trying to avoid that sort of knee-jerk reaction. We were talking on the final bar with Dave yesterday about, whether or not this real rally this week is a bear market rally or if it's the start of a new trend. And you have to be careful because it was a very strong rally. But if we look at a chart like this, we can see that rotation into cyclical sectors away from sort of the mega cap growth stocks is still very much in place. The middle of this chart, like you said, is staples, energy, financials, industrials. And then in the bottom here, we have utilities really still in a go trend. And the no-go colors are discretionary, technology, communications. So certainly a more defensive looking chart in terms of the outperformance versus underperformance against the base index.
Absolutely. So technology, information technology sector, the consumer discretionary sector, and the communications sector really underperforming the index. So whether the S&P 500 is up or down in the week, we're looking at the trend perspective on a relative basis to help us understand, where we can fish where the fish are, or at least reduce any drawdowns in that correction. Alex, thank you very much for walking through the Rel Map. Let's take a look at that blue bar there on the energy sector. Everybody's been discussing this week just the rapid rise in oil. If we pull up a USO chart just to look at an ETF representing the oil index, we can see just how that rally has been so pronounced through 2022.
Yeah, we're at new highs on several names in the energy sector on oil relative to the rest of the index. Even though we had this run this week, we're certainly way off our highs. You can see that right here, oil is at highs at sort of much higher than it was a couple of weeks ago. So there's really been an uninterrupted go trend that we see in the energy space. And like you said, this is USO, the United States Oil Fund, strong blue bars. The pace of that rise has slowed slightly, as you can see here. The oscillator is at overbought levels. So, really a go trend in full force.
And obviously, using color and data visualization to represent a lot of information without distracting us with too many lines on the chart, we could see that oscillator switched from the dark blue to the light green here on these last few bars. What does that mean, Alex?
Yeah, so just trying to put everything into one chart, that shows us that volume has changed. There's been this darker blue area told us that volume was heavier than usual. So as prices ran up, a lot of volume compared to its average. And now as price consolidates a little bit more sideways, this aqua line is telling us that volume is lighter now than it was maybe a week or so ago.
So quick review, the weight of the evidence is the trend conditions overall, that blend of indicators still in a strong go trend for oil. But we've seen the pace of that rally sort of taper off. Volume has gone away, but momentum is still at overbought extremes. Overbought itself, not a bad thing. The way Ralph explained it to me when I first started at the CMT Association was, you don't sell something just because people are enthusiastically buying it. You do want to watch for the fact that that can retrace. We might see momentum wane at these levels. But as oil is approaching $90 a barrel, we may see a little bit of exhaustion from this trend, maybe a little bit, potentially when this momentum leaves extreme overboughts, we'll see a counter trend correction arrow, that red arrow that we saw where there was a little consolidation in price. So really good to see from a trend perspective that oil is still strong, but maybe maxing out in the really short term. Switching over from oil itself, let's look at the energy space more broadly, the XLE energy sector of the S&P 500, and just see how that's playing out from an equity basis this week. And we can take a look at it on a long-term basis, on a weekly basis. We can see this trend play out from last summer.
Yeah, from last summer, the Go trend has been in place, a series of higher highs and higher lows. We get the Go trend continuation icons throughout the trend. And really quite strong at the moment. Again, like you said, overextended, maybe, but we'll wait to see the oscillator come back. Again, the oscillator is overbought at the moment and on heavy volume as we make higher highs again this week.
Absolutely. The phrase "there's a bear market there's a bull market somewhere," even as growth equities are selling off. For those who've been holding energy stocks, this is a great trend to size up into. Let's take a look at an individual name within the energy sector, Alex. Big earnings season reporting this week. If we take a look at Chevron, CVX, I know you and Dave were talking about that on the final bar yesterday afternoon, but just taking a look at this on a daily basis, we could see kind of how things have played out since earnings reporting late last week.
Yeah, it's like you said, if you are in the right trend, the trends are there, and this is a place to have been for the last almost a year, half a year. Chevron, like you said, reported earnings. We've seen nothing but an uninterrupted go trend, with the GoNoGo oscillator finding support over and over again as prices consolidated in the middle and then took off again. And more recently now, on heavy volume, the oscillator once again found support at the zero line, giving us a go trend continuation icon, suggesting that we may well see price make an attempt to set a new high in the short term.
Absolutely. I love the way that the sister indicators play together. Obviously, a composite of momentum indicators represented in the oscillator in the lower panel, and a blend of trend indicators represented on the price panel in the top. But you could see momentum continuing to come back to neutral and then resurge in the direction of the trend. What a healthy looking go trend for Chevron. That's great. All right. Let's turn our eye to something else in the commodity space. We've obviously, everyone's been discussing the energy space and the oil markets themselves, but within other commodities, right? If we're thinking about hedges against inflation, and what investors might find valuable in their portfolios over the rest of this year, something like diversified agricultural commodities. Maybe not as sexy as something like Zoom Technologies or Peloton, but certainly a healthier holding for a lot of portfolio managers out there, and performing a lot better than our gold bugs have found in the precious metal space. So if we look at DBA, let's look at it first on a monthly basis, just really long term. So we obviously can see there's a multi-year no-go trend in agricultural commodities, but they came off the lows in 2020, that COVID crash, and they've been rallying strong since. So we might just be in early innings from a very long-term perspective.
Yeah, we've seen a lot of discussion around the potential for a commodity super cycle, and that's not something that happens in 4 to 6 weeks, right? So when you're talking about something that sort of important or that long term, you step back out and you look at a chart like this, and you can see that it really well and truly has come out of the no-go, and we're seeing almost a year now of a go trend on a monthly basis. But these super cycles are sometimes a decade long. So we
Correct.
could be, like you said, in the early stages of this long-term go trend. And this is a diversified agriculture fund. And you can see that the oscillator crossed above zero, having found resistance at zero over and over again, while that no-go trend was strong. Then that cross above gives us that early indication, a leading indication that the no-go is being threatened. And then we see the amber go fish, and then the go trend taking place. And now we're overbought on heavy volume on this really, really long-term picture. But it does just line up with what we're seeing in terms of rotation into cyclical sectors and value versus growth and inflation hedges. You start to paint a story that really does begin to make sense.
Yeah, and these structural trends, they make sense, right? You had the great financial crisis in 2008, and we've seen this long-term no-go trend as huge sovereign wealth and pension funds have tried to unwind, perhaps maybe what was a knee-jerk reaction or a need to get exposure to alternatives and real assets in the wake of the global financial crisis. And so those things peaked in 2011. And they've been in a steady downtrend since. Now, what we're seeing as regimes shift again, and we're looking at a rising rate environment as we recover from that COVID crash, there's renewed interest. And so the time that it takes for large institutional pools of capital to assemble positions and to get involved, we could see this play out for months and years to come. So that's a great, really long-term perspective, Alex. Why don't we take a look at DBA just on a daily basis, just to check in with where we're at from more of a trading perspective?
Yeah, from more of a trading perspective, we just took out these prior highs. We saw this go trend continuation icon pop up on the chart when the oscillator bounced off zero on heavy volume. So still very strong in terms of a go trend on the daily as well.
Fantastic. Fantastic. So you heard it here first, folks. Not quite as sexy, but we love soybeans, wheat, and the rest of the diversified agricultural commodities, right?
Yeah, yeah.
All right. We've got just a few minutes left for today's show. I want to talk about a couple other companies that have been reporting earnings and actually rallying off those reports. What's fascinating to technicians is when companies like Netflix and Tesla, they reported on fourth quarter earnings. They beat earnings estimates, and then in the case of Netflix, traded down 20%. Huge gap. In the case of Tesla, a 10% fall.
Yeah.
For those that came through this earnings season intact and are showing some new signs of leadership, we really want to pay attention to those. Those are the securities, the shares that represent quality to a lot of investors, and we're seeing them pile in. So let's first pull up AXP. That's American Express. Thank you, Alex. You're ahead of me. We've talked about the financial sector generally, lending institutions, banks, but the American Express company, after reporting earnings, has had a great rally. What jumps off the chart to you here, Alex?
And again, we are technicians, and at least I am a pure technician at heart, and I like to look at the price charts, but I can't help but be curious about the story. And even this makes sense in that, the rotation into sectors such as financials. Does it make sense that the growth names dropped on positive earnings, but something like AXP is outperforming on positive earnings? The environment is changing perhaps. And that's what we saw here. We got a quick go trend and a go trend continuation icon. And then we've had a strong 5 or 6 day rally on strong blue bars.
Fantastic. And in terms of, maybe resistance levels to keep an eye out, how close are we to those prior highs, Alex?
We're close. We are close. So if you took a sort of a really quick sort of week-long trade based on earnings and perhaps this, you may be watching very closely to see if you might want to take profits at this point, because we are at potential resistance, or you at least might want to set stops very tight and then hope to break through prior highs, which would be a really, really strong sign for continued gains.
Absolutely. And in our last 2 minutes, people sometimes need to keep a toehold in the technology space. We're not monolithic about that. But let's take a look at what has been leading within the technology space, showing some real relative strength against its peers. Let's pull up a chart of Apple, and also came through earnings sort of intact. Let's talk about it, though, from a trend perspective using GoNoGo Charts.
Yeah, Apple's very interesting, and there's a lot of a lot of people that I know and work with that are long Apple on the long term. And this is an interesting chart because the daily could have perhaps given you an entry point here if your overall bias was to the long side on Apple. We got this counter trend correction arrows, green triangle here at this swing low. And we've been now in amber go fish bars, a string of them as the oscillator gets back into positive territory. So we're looking to see if a go trend takes place. But what I was saying was, if you take this to a weekly chart, then you see that this go trend in Apple is very strong, and we even got a continuation icon. So if that's your perspective and you're looking for entry, the activity that we saw this week from Apple would be very encouraging.
Absolutely. So GoNoGo oscillator back into positive territory on heavy volume. The trend is still neutral, meaning the overall conditions of that go trend have not been fully resolved yet. But you could take an early entry if you were biased to the long side, looking at that weekly chart. Alex Cole, thank you so much for walking us through what have been really exciting markets so far in 2022. I wish you and your family a wonderful melty day in the New York area. And we'll look forward to seeing all of you back here next week for another GoNoGo Charts perspective on the markets. If you're watching on YouTube, make sure to check out StockChartsTV.com. That's the on-demand, or you can download the app wherever you find apps for your mobile device. Thanks so much, Alex. I'll see you next week.
All right, take care.
Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.